Hello, my name is John Krisko, Manager, Analytics and Data for Fundata Canada. I'm here to talk about the Canadian Investment Fund Standards Committee, also known as CIFSI. The CIFSI was formed in 1998 by the major Canadian investment data and research firms with the goal of standardizing the classification of Canadian retail funds, including mutual funds and ETFs. Today, the CIFSI is the foremost source for investment fund categories in Canada. The categories are relied upon by data providers, fund issuers, investors, and advisors to create, rate, and rank ETFs and mutual funds. The CIFSI membership includes a broad selection of industry participants, from data and research firms to industry associations representing fund issuers and managers. This ensures balanced input from a variety of stakeholders on new initiatives and category maintenance. The CIFSI maintains 63 categories. Classification into a category is based on holdings and allocations, which are evaluated using a time-weighted average and include up to 36 months of data. The categories are broadly grouped under the headings fixed income, balanced, equity, alternative, money market, commodity, and specialty funds. The fixed income, balanced, and equity categories contain approximately 90% of ETFs and mutual funds, with the remaining 10% spread across the other categories. Fixed income categories are segmented based on geographic asset exposure, credit quality, duration, and sector exposure, for example, corporate versus government. Funds in the balanced category are measured based on their geographic exposure and the mix of equities to fixed income. Equity categories generally focus on geographic asset content, for example, Canadian, US, European, and emerging markets equity, but they may also consider average market cap and dividend yield. In addition, there is a subset of sector categories that capture funds with a specific sector focus, such as financial services and natural resources. The remaining categories evaluate funds based on satisfying specific criteria, such as whether the fund is an alternative mutual fund, a money market fund, or holds commodities or real assets. There are three major channels through which a fund may be classified, beginning with the New Funds Review. On a monthly basis, all ETFs and mutual funds are individually reviewed at launch to determine an initial classification. Subsequently, ETF and mutual fund portfolios are screened on a quarterly basis to ensure that their allocations fall within category thresholds. If a fund is persistently over a threshold, a category move may be warranted and the fund issuer is notified. Finally, the CIFSI maintains a system for fund companies to request a reclassification of their own funds. This allows an issuer to request a move to a specific category and provide data and reasoning to support their position. In addition to monitoring the funds, the categories themselves are continually reviewed to determine if changes or new categories are needed. An initial proposal is released and feedback is sought by industry participants through a public comment period. After comments are reviewed, a majority vote is required to adopt and implement the proposed changes. For more information on the CIFSI, including category definitions, please visit cifsc.org.